All right, guys, the cat's out of the bag. We have 5 earnings to break down from Disney, Celsius, Datadog, Crocs. Yes, you heard that right, Crocs. I used to wear those 15 years ago. I know they're back in style now, guys, but you can't catch me wearing them now. Either way, Rivian as well. We have to break down Rivian, whose numbers literally just came out. So hit the like button, make sure to subscribe, and feel free to follow me on TikTok, on X. All of those are linked down below. Or just type in Stasserfest. You guys will find me on there. Stas Talk Stocks. You guys know how to find me. So yeah, let's dive into it. Break down Disney first, whose stock I'm sure you guys saw went down a whopping 9.5% on the day. So right off the bat, I'm sure you guys saw the company beat on EPS. They reported, let me see here, guys, adjusted EPS of $1.21 versus the $1.10 expected, but they missed on revenue, which is not the best sign. Not the end of the world, but I don't know. What do you guys think? Traders don't like seeing that, right? Investors don't like seeing a top line miss or a bottom line miss for that matter. But in this case, 22.08 versus 22.12 billion for Disney. So mixed bag on the top line, bottom line there. But we did see some good signs here. Disney Plus core subscribers, 6 million were added. That's awesome, right? Core average revenue per user up by looks like 48 cents or plus 44 cents, excuse me. That's pretty good there. Let me come up and see what else is going on. And oh wait, I forgot to mention this. One of the biggest or best metrics I would say from this report is the fact that they grew international sales by not 10%, not 20, but by almost 30%. 29%, I believe, was the exact figure. But yeah, that's really good news there internationally, guys. The company is growing very nicely, and of course, their traditional cable business continues to suffer. But obviously, we all knew that was going to continue. We all know where things are trending. They're going for streaming, right? Obviously, that's the name of the game. And a lot of the growth from the quarter, guys, which I think they only grew revenue by 1% year over year. So there's not obviously much growth there. But what helped the business this quarter, and this has been the case, has been streaming and, of course, parks and entertainment, right? Have you guys been to the Disney parks over the past year, 2 years, 3 years? They're pretty much packed every single freaking time I've been, and I've been there a little bit too many times. I don't want to admit how many times I've been there, guys, and it's a long story. We're not going to get into that in this video, but I've been there a couple times. Let's just say that over the past 2-3 years, and every time it is packed, right? So Disney is down 9.5% as of today, and we're at the bottom of the channel here on the 4-hour time frame. And to be honest, this was a much needed sell-off, and it looks pretty good on the chart still. Yeah, we're under the moving averages, which kind of sucks, but we're still holding an uptrend, and we're down about 15%. Yeah, about 16% from the recent highs, which again was much needed. So I'm personally long Disney. You guys know that. I've owned the stock for years, was buying it recently in the 70s, 80s, and I actually bought more, I think about a month or two ago at about $110 roughly. So I guess on that lot, I am down a little bit. It is what it is, but my overall average cost is under, well under $100. And I guess maybe not my one portfolio. I have a couple portfolios, guys, but for sure in my main one, it's under $100, well under $100. So yeah, Disney, I'm still long. I'm, looking to buy more here pretty soon. And Celsius is another one that reported earnings, which you probably know Celsius. I'm pretty sure everybody in their 20s and 30s has seen Celsius. Even if you don't drink energy drinks, guys, you probably know what this company is, right? You've seen the brand. So Celsius reported GAAP EPS of 27 cents, which beat the 18 cents expected, and sales came in at $355 million, which missed, holy crap, what? $389 million expected. So they beat EPS, but they missed by about $35 million revenue miss. I actually didn't see that till now. A lot of these companies, guys, I like just waiting until the video to get the raw reaction, except for Disney, because I do own Disney. I wanted to look at that one a little bit before the video. Either way, Celsius I don't own, and oh boy, am I surprised that they missed. Well, then again, not really. I'm not really that surprised because look, this company, I'm sure you've seen it everywhere. Like I said, they pretty much have seen hockey stick growth, right? So it's not going to be like that forever. Just because they miss a quarter doesn't mean, by the way, their growth is over. It's not over, probably, most likely. But, companies that see hockey stick growth, there's going to be quarters where it might not be as hot as expected. The growth might not be as great as expected, and that's the case here. But overall, guys, the company's still growing nicely, and obviously investors and traders know that, considering we got that number this morning and the stock didn't really do anything. It pretty much stayed flat. Sure, it went down 1-2%. All right, big deal. You would think a company that missed revenue by 30 million, a growth company especially, would be collapsing, but it's not. It's actually looking pretty decent right now. It held up. Well, I guess initially it did collapse. Let's not get it twisted. It did collapse. We see that right here. It dropped 20%. But the fact that it recovered, this makes my point even stronger. Investors and traders still believe in the company. Well, I guess investors do. I don't know about the traders. They want to make some short-term money. You guys know how that goes. But investors bought it up, man. They bought it up, and we're right back pretty much to where we were before earnings on Celsius. So, yeah, I'm not in this company, but looking at it from an outsider's perspective on such a bad revenue miss, the fact that it only went down under 2%, consider that a blessing. Now, will that continue into tomorrow? I don't know. Maybe tomorrow we go down 10% for all we know. But as of now, it's looking pretty decent. Let me see. Did the company provide guidance? I'm actually not seeing guidance here. But, yeah, that's a quick breakdown on Celsius. Datadog is another one. DDOG, let's pull it up. This thing completely collapsed today, down almost 11.5%, pretty much right at 11.5% in the red. And DDOG reported, let me see here, guys, EPS adjusted 44 cents versus 35 cents. All right, that beat. Sales 611 versus 591 million. That beat as well. And guidance, let's see, 620 to 624 for Q2 versus 620 estimated on adjusted EPS of 34 to 36 cents versus 35 cents estimated. So why are they falling so much? It looks like their guidance is pretty much right in line. In fact, a little bit better than expected for, some of these metrics. And the stock went down 11.5%. Maybe I'm missing something. I don't know. I'm actually not in Datadog. I haven't really done crazy research on it, so maybe, I'm missing something. But here we are at the bottom of this channel. If I draw it out, you guys can see. So let's see what happens around here, man. $110, $112. We're pretty much right by the lows from the beginning of this year. Literally, Datadog started off at 110 back in January. It ran to 138, so we're testing that spot again. This is going to be big for DDOG. Crocs. Now, we got to break down Crocs. I haven't, worn them in 15 years, but I know they're back in style, guys. And, well, that's shown here in the stock price. Clearly, this thing was at $71 back in November, October, and now we're pushing 140. Now, is my math correct there? Let me see here, guys. 70 to 140. What is that? What is 70 to 140? Oh, yeah. That's a double up. That's a double up, guys, in about half a year. So this stock has gone up 100% in half a year, and now we're breaking out almost 8% post-earnings, which is insane. That goes to show this thing, it's legit, right? At least right now. These numbers are looking pretty good, right? So the company reported adjusted EPS of $3.02. That beat the $2.23 expected. Not just beat, that annihilated the $2.23 expected. And sales $939 versus $881 million. So they crushed it, guys. EPS and revenue. And Crocs' Q2 revenues up 1-3%, adjusted EPS of 340 to 355 versus 347. So that's pretty good there, guys. Really good. Guidance, let me see what else. Provides revenue guidance. Where the heck is it? Am I blind? Geez, where's the revenue guidance at, guys? Either way, they're crushing it. EPS, revenue, that alone, man, they absolutely crushed those numbers. And you guys can clearly see we sold off from 146. All right, we cooled off a bit to 118. Nice $30 drop, 18%. We consolidated. Now we're right back to breaking out like it never stopped, guys. Back over the moving averages. So this could be a nice momentum play. We'll see. CROX. And full disclosure, I don't own Crocs or Datadog or Celsius, but I do own Disney, and I do also own this one, although it's a really speculative position for me. Rivian, RIVM is the ticker. So let me see what this company reported, guys. Let's see. We opened up at around $11.30, so there actually was some hype here, if you will, before the earnings, and now we're back under $10, barely. I guess we're at $9.98, so slightly under $10 before these earnings. And let me see after the earnings. Now let me see what they reported, though, guys. Looks like Rivian reported negative $1.48, so obviously they're losing money, hence why it's a speculative position for me, versus the negative $1.25 expected, so they missed on EPS, and it looks like they also missed. I was going to say that, almost slipped up. They beat on sales, guys. There we go. 1.2 bill versus 1.16 billion expected. Let me see here, guys. And it looks like they posted a Q1 loss of $38,000 per vehicle. Think about that, guys. For every Rivian you see, on average, for example, right? I mean, maybe not. I guess this is only for Q1. But think about this. If you see a Rivian, just think, oh my God, Rivian lost almost $40,000 on that car. I mean, at least in the Q1 period, which is pretty insane, guys. Obviously, they're a growing company. They're losing a bunch of money again, which is why it's a speculative position. But let's see, loss widens, revenue increases. All right. Anything here on guidance? I'm not really seeing anything here on guidance. Maybe we'll get more insight as the earnings call, plays out. But overall, guys, Rivian is getting annihilated. Not so much today, but overall the past couple of months, it's been getting annihilated. And to be honest, when I saw this thing get to the $8 to $10 range, I was just thinking to myself, why not just buy some shares, throw some spec money at it? I think the car is cool. I think the tech's pretty cool. I think there is potential there. Why not throw some money at it, as it is down like 99% from all-time highs? I mean, why not at this point? And by the way, Amazon's got a huge stake in this company, right? I'm a big believer in Amazon. I have a lot of money in Amazon. So Rivian's down 95%. I was like, all right, let me just put some money, and, I'll probably add some more shares as time goes on, of course, within reason, as again, it's a speculative position. So what do you guys think? Let me know your thoughts in the comments. Hit the like button. Don't forget to subscribe, and feel free to check out my Patreon if you guys want to see me build out my private portfolio, be a part of the Discord chat, and see all my charts and ideas throughout the day, and have more access to me throughout the day. All of that's on Patreon down below. Check out the QR code right here, or go to StasserFest.com/Patreon. I'll see you in there, guys. And with that being said, guys, peace out.